Hey folks, and welcome to the Pipnotic Symposium for the 23rd of October 2019. I'm going to go through a couple of trades. I'm looking at this one at the moment. This is the Australian dollar Swiss franc. We had this clutter of price here. Price came down. We had this nice pattern. I'm just going to show you what this pattern looks like. So price either comes down from the top and wasn't very pretty, does something like this and then moves away, or moves up from the bottom, moves sideways and then leaves. The thing you need to look for is the sloping tops for supply and the sloping bottoms for demand. So you want to see, like, I suppose you can call it like a triangle kind of thing where things are getting squeezed. Okay, things are getting squeezed up, things are getting squeezed down. And this is what we have here. So I like that one, like a little tiny one. I mean, 9 pip stop. We'll see if I survive that one. That's a pretty tiny stop, but we'll see. That's what I'm looking at there. Then we have the Euro Kiwi, and this one is just here. I just like this price rally. We accumulated, we formed this little parent. The slingshot was pulled back to the edge and then it went north and it has not been back since. So this is a nice area. This is this 172.60, another pretty small area and not so bad. So we'll keep an eye on that, and these are probably going to be triggered today or tomorrow, I'm expecting. Have the CAD Japanese yen, same kind of pattern that I'm looking for. This one is where price came up, we pulled back, we came up, we kind of had that and then released. So this, the highs, so the lows got higher. We keep testing this upper edge, so this stays same and all of a sudden it pops up. That's what we have here as well, which I like. Then we have the Euro Australian dollar, and this is a different kind of pattern where you have kind of a head and shoulders thing. So you have price goes up, forms a high, forms a head, forms a neck shoulder, and then it goes down. A lot of people trade the bottom. I don't do that. I like to trade the top here. So focus on here, and that's exactly what we have here. So we have the left shoulder, the head, the right shoulder, and then the drop. And I'm doing the head. Why? Because we have our slingshot like this. We have our pouch. Hope that's clear. I think it's quite pretty personally, but I didn't go to art school. But that's what we have. And the slingshot was pulled back to the highs before it released. And if we look at that a little bit clearer, you can see it looks like that. So price shoulder, we had high, price came down, and then we cut away. The release occurred from here. Okay, that's what we have there. And the Euro Swiss franc, I love this. Here's a little tip that I've started to do a lot. Zoom out a lot. So if you go to a chart, let's just pick anyone. Let's pick the pound. Doesn't matter. Let's pick this one. So zoom out a lot. Not all the way, but like the second to the most zoomed in, like this. All the most zoomed in. And look for the clusters of white. Here we have a lot of white. Price bounced on it here. Here we had a lot of white. Price went close to it, and then we left. So these like little areas of clusters of white, this is just showing you where you have accumulation, and it's quite clear when you zoom out all the way. If you go like this, then you just have, like, you can't really see them, but when you zoom out, you know the entries have to be around white clusters. Here we had a white cluster, we had a bounce. Okay, and so here we have a white cluster, maybe we'll get a bounce a little bit high up. Here we have a white cluster, here we have a white cluster. So just keep that in mind. I use that a lot. Actually, rather, I have been recently. And the reason I did it is because when I'm doing symposiums, I like to zoom out a little bit just so I can get more price in. And it kind of brought my eye to these little clusters. Here we had a little cluster, price tested. Here we had another cluster, price tested. Really interesting. And another tip, go to the software and enable show consume supply and demand. Set this to true, and this will enable you to see these areas that are being tested, that have been historically respected and then removed. We had this one tested, this one tested, release. They're all not going to work. This one didn't work. This one worked. This one didn't work. But you have to also focus on context. We had this one, it worked. We had this one, child, parent. Price went to the top of the parent and then turned around. We had this one, tested. This one, tested. This one, tested. We had this one just here. It was tested by this pin bar. We had this low. It was tested. We had this one here. It was tested. This one, tested. This one, tested. Can you see that they're almost all holding? Okay, so really pay attention to these. Okay, and we have a we have a rectangle here. Okay, so this is important. This is in the middle of one of these legs, and the ones in the middle. So you have the tops. You have the top of a move. Oops. You have the top of a move, and you have between the move, and then you go here. Okay, the stuff in between, unless you're seeing something like a really nice pattern, I mean, these are going to work out less, but if you're focusing on here and on here, then I think you're going to have a much better hit rate. So we had this one, tested, and it worked. We had this one, we had two, like a parent and a child, tested, worked. This one worked, even though it went through it. If you were aggressively managing this trade, this one would have been fine. You had this one here, it was tested. You had this one here, it didn't work. Why didn't it work? Well, because price went down to opposing demand before it reached the entry. So when price reaches an area of value that is in opposition to your position, you don't want it to reach that area of value before it reaches your entry, because we would have had an entry to sell here, but we would want price to reach it before it got down here, which it didn't. So this one we would have taken off. Okay, so just a little tip there that I hope you find useful. So here we have the euro Swiss franc. We have this nice price rallied. We had these highs here, so we had resistance here. Price accumulated just below, and then we just rallied like the devil away. So that's a pretty nice area there. There's the 1.0930-ish area. Have the pound Aussie. Let's zoom out. White clusters, we have this this pattern is, I'm not a pattern guy by any means, but I'm just trying to help explain. We have this, and the area that price cut away from is here. Okay, so we had sloping resistance. This is the one that broke it. So we had trend line, we had market structure failure. This is the area that caused that market structure to fail. Is this one going to work with guarantee? Absolutely, positively not. We have probably slightly better than a 50% chance that this one's going to work, and this one, and this one, and this one, and this one, and this one. But we don't care that we only have 50% odds. Those are pretty good. 50, let's say 55% odds. Those are pretty good because the risk reward is beneficial. So we don't have to win every trade in order to make money. Okay, the pound Canadian dollar. So we have, zoom out. We have, this is going to be very clear on like the daily or the weekly, I think. So we have this kind of price moved up, we moved sideways, and then we cut away. So we're just looking at the area where we had value. This is an agreed area of value. How do you know it's value? Because price is trading there. People are they're happy buying and selling at these price levels. When price goes back, well, then you have to establish a new level or area of value, which is down here. So for sellers, this is much more attractive than this. So once you see this, then price leaves. People are thinking, oh crap, I didn't get to sell at this level, so now I have to be happy selling here. And if price goes away, they're a bit like, oh no, I didn't get to sell at this level, now I have to sell at this level, even cheaper. Okay, and so the higher you get to these areas of value, the higher the likelihood that price is going to bounce. This is an area of value. We experienced it here, and we experienced it here. Now price is cutting away. We had this. This was like the second area of value here. Price returned to. So people who didn't get into here, didn't sell here, were selling here because price left. Okay, they got into here, but when price comes up to here, then I'm expecting price to wriggle lower from there. I don't know if that stops a little bit too tight. Let's have a look. I think it's probably going to be all right. Otherwise, I'll reduce my position size and look. But you can see pretty clearly here that there's a lot of white stuff going on in there. You can see pretty clearly. Let's move this. Yeah, I mean, as a matter of fact, you can see the lows, you see the tests, and the origin of it is up here. So we had all these tests. We're testing this area of demand. It's tested a bunch of times, and now it's gone. The origin of that area is somewhere up here. I want my stop to be above here because here we have the green candles prior to the consumption of this. Okay, so yeah, we'll leave that on and see what happens. Remove this, put this back, zoom out. Cool. Well, I'm gonna leave it at that. If you have any, keep your eyes on these. If you have any questions, post them in the forum, and have a good day. Thanks for watching.